Hello friends, hope you are doing well. So today I have come up with another important company analysis, that is Tata Consultancy Services TCS, and TCS just came out with the result in last few days, almost one day back, and lot many investors actually requested me to do a detailed analysis. How was the result and what should we do? Important question, whether we should buy or whether we should sell or whether we should hold. So I'm going to give you answer of all that. So be till the end, and also if you are not subscribed to my channel, do subscribe it. My name is CA Tapan Doshi, and I normally come up with lot many videos related to the stock analysis and the company analysis, global analysis, and whatever domestic macro factors and everything I do discuss in detail. So do subscribe to my channel to have a complete updated related news related to the stock market. Okay, so let's go and check about TCS result first. So first we are going to talk about TCS related to. First, let us understand how was the performance. Correct. So this is the TCS Quarter 1 performance. Now this has been released by the Bombay Stock Exchange. Actually, normally company files to the Bombay Stock Exchange related to their whole result. So if you see, the revenue has grown by almost 52,758 crores. Okay, so growth is around 6.2% year on year and 15.5% in constant currency, which is a good actually growth, which even I estimated that it should be around that one. And also if you see the order, North America is around 19.1% and retail is around 25.1% constant currency. They are the lead among the segments. Order book is 8.2 billion. Now actually order book is currently at a stagnant level. If you see the recent quarter or 6 months, they have not got many orders. The reason is that recession fear in US and Europe is there, and as a result, no, there is a little bit of lag by the all the multinational companies to give orders related to IT and many other you can say segments also. So overall recession fear is actually having an impact in the IT sector also. Now, if you see, they have added 9 clients and all their workforce is almost crossed 600 lakh people, and that is 6 lakh people now. That is a big milestone. You know that the TCS is already one of the leading employer in IT industry in India and across the world. Okay, so he is one of the biggest employer. Now talking about quarter ended highlights. Now the quarter ended has revenue was around 758 lakh crore. So it is around 16.2% year on year growth. Constant currency, as I told you, 15.5% year on year. However, the biggest surprise was around that operating margin was around 23.1%. So actually there is a constant drop in the in the operating margins of IT companies. Most of the companies, the operating margin has fallen. Even if you see the last quarters also, the operating margin has fallen. The reason are simple, that no, these companies are employing lot many people currently, lot many employees they are employing, and their cost is going up, and even the attrition rate is on a higher side. If you see, TCS attrition rate is around 11.7%. Now that is one of the highest. Okay, in recent quarters, or you can say one of the highest in recent past also. So that is a problem, and because of this attrition level, they have to give a good salary increase to most of the employees. So that is why the operating margin is falling. And also what is happening, one of the other reason why operating margin was fallen, because of the COVID crisis, they are not able to keep their person across the world. Okay, because their operation is there in Europe, US, and across the countries. So now, as people are not their employees are not able to reach each and every region, they have to outsource some of the services from the local people, and because of that, what is happening, their operating margin is falling. Correct. So that is also one of the main reason why operating margin is falling. Now, this operating margin fall is across the companies. It's not only the TCS. So that is having a big hindrance for the no growth of the company. Now it is been estimated for the few quarters, the actually operating margin will remain on the lower side. across the company. So that is why currently, if you see, because the Nasdaq is falling, even the IT companies are falling. And after the result, you know that TCS fallen by almost 4 to 5%. And the reason is that they are saying that now the growth will be at a slower pace. So that is the reason the TCS is not performing as it was performing earlier. Correct. So even if you see the head count, of course, this time it is they've added around 14,000, which is on the lower side. However, they've already actually employed most of the personnel earlier. Correct. And again, as I told you about attrition and even the dividend per share, they declared around 8 rupees per share. Now let us see in detail how was the result. So now this is in skinner.com.in. Now if you see the result, even the PE ratio, if you see currently it is 29.1. So current price is around 3085 rupees. At 3085 rupees, PE is around 29.1. Okay. Now understand one thing, the price, of course, it has gone up to 4,000, it has fallen to 3,000 rupees. So already company TCS has already gone more than down by almost 25%. Even if you see P ratio, at one time it reached around 41, 42 P. Now it is around 29.4. So even P ratio is coming down. But what is the main reason of P ratio? As I told you, the growth is slowing down, and because of the economic crisis across the world, there is a saying that yes, IT companies will be performing at a slower pace, and that's why their PE also going down. And that's why you see, understand, whenever there is a problem in the world, no, they will start re-rating the company. Okay, and maybe on the downwards also. That is what now. IT companies index is directly correlated to the Nasdaq. So if the Nasdaq is falling, then IT company index will also fall. And that is why, as the Nasdaq, most of the IT companies like Google, Microsoft, Tesla and all that, their P ratio is being downgraded. That's why the P ratio in Indian companies, Indian IT companies are also downgraded. Correct. That's why currently it is around 29.1 PE. Okay. Now if you see the median PE is around, what is the median PE? That is few years PE is around 26.2%. Now again that till TCS is on a higher level. So median P is around 26.2%. Okay. So now let us understand the result here. So talking about the result, that is quarter and quarter. If you see the against year-on-year comparison, so normally we have to compare on year-on-year comparison and quarter-to-quarter comparison. Best way is to check year-on-year result. But however, last year Corona crisis was that some of the sector were not performing well during that COVID crisis, but the IT sector was performing well, so we can compare year-on-year result. Okay, so if you see that almost 15% growth was there around the current this quarter, it was 52,578 crores, 750 crores against the 45,411 crores. Okay, even the operating profit was a little bit on a higher side, but however, if you see operating margin, that is a bigger problem. 25% against the last year 28%, and that is what happening currently, guys. Their expenses are going up. Okay, and sales also, there is a fear that because of the renegotiation across the world, because of the recession fear, there will be a problem in sales. However, the CFO and the MD of TCS already conveyed that yes, even though recession is here, still most of their clients are not renegotiating, but we don't know what will happen in future. Okay, and also I told you that Ebitda margin is lower side, that is what happening at 23.1%, which was earlier around 26-27. So that is an issue. Now if you talk about profit before tax, it was last year it was 12,163. However, currently it is 12,776. However, if you see quarter on quarter, even though last quarter it was 50,591 crores, and the profit was I think let us check about net profit. Net profit was 9,926. However, currently it was around 9,478. So against last quarter, the profit was on a lower side. and that is what happened. TCS grown at a lower pace compared to the last quarter. So this thing you have to keep in mind when you are doing a valuation of a company, and this shows that yes, there is some problem going on in IT industry which is reflecting in these results. Okay, if you talk about year on year, we don't have to compare year on year comparison here, because normally if you see March 22, which was the last quarter, that we can compare with the March 2019, but as it is a June quarter, let us keep focus on the June quarter only. Now let us talk about various PE ratios. Okay, now talking about various PE ratios, here it is. Now let us compare how TCS is performing against the other peers company. Now this is the quarter where TCS already come up with the result. However, Infosys has delayed the result, and it is I think going to come in the last week of this month. And rest of the company are also releasing their result one by one. But however, if you see, currently TCS PE ratio is 29.1. However, but if you see the industry P ratio is 24.29. So TCS is already on a trailing on a higher P ratio compared to the industry. However, Infosys 27.5, HCL is at a lower P ratio, even Wipro lower, Tech Mahindra is on a lower P ratio. And even personally, I do feel that Infosys may actually fare well this time, and they may perform better than compared to TCS this quarter. And actually over the years, in last 2 to 3 years, if you see, Infosys has done much better. How you can say that? If you see here, this is the sales last average growth, and even profit last 3 average. Okay, now TCS sales has grown by 9.4% average CAGR I am talking about, and profit has gone by 6.84%. However, if you see the Infosys, it is 13.74, and profit has grown by almost 12.88. Other company like HCL also 12.33% last 3 years, and profit by 10.54. So guys, this shows that TCS has grown at a lesser pace compared to Infosys and the HCL, and that's why I do feel from here also Infosys, HCL, even another company if I want to bet on is the Tech Mahindra. These three companies may actually perform well in future compared to TCS. Correct. Now let us talk about other issues, and another important issues which you need to keep in mind is that EV by EBITDA, that is enterprise value upon EBITDA. So that is around 9.32%. Now understand, EV by EBITDA, if it is at a lower level, then it is better for a company. Why? Because then its valuation. What is EV? EV is nothing but the enterprise value. So total enterprise value divided by EBITDA, earning before interest, depreciation and amortization. Okay, interest, tax, depreciation and amortization. So the valuation will be lower side if the enterprise value divided by EBITDA is on a lower side. Now if you see here, for TCS it is 19.32% times. Okay, sorry, not percent, times. For Infosys it is 17.66 times. For HCL it is 11.37 times. Now that is on a, so that shows that TCS is much more on a higher side compared to Infosys and HCL. Okay, even Tech Mahindra it is 10.4 times. Okay, so that is on a lower side. Correct. Now debt to equity we cannot check in in the IT companies, because debt is almost on a lower side for all the IT companies. Even free cash flow, TCS is having a good free cash flow, 37,000 crores compared to Infosys and all that. However, if you see the book value, current CMP against book value, it is 12.66 times, guys, much on a higher side. Infosys 8 times, HCL 4 times. That shows, guys, that no, TCS is actually trailing on a very much higher level compared to other companies, and that premium only is making TCS as an underperformer for the IT industry. So these things you have to keep in mind when you are checking the result. And also ROE, if you see, it is 43, but ROE it is 43.6. Now that is very good. The more the ROE, better is for the company. Now ROE is 43.60%, ROCE is 54.87%. Correct. Now that is a very good ratio, guys. Understand, compared to Infosys, which is 28.98 ROE and 37% for ROCE. Even HCL 22 for ROE and 25.65 for ROCE. So this is why, because of high ROE and high ROCE ratio, TCS is been given an extra premium and additional premium. Understand one thing, the more the better the company perform, the more the better the valuation the market gives to them, and more the better premium they give to them. That is the main reason why TCS is always having a high P ratio and always having a no all the ratios, basically EV by EV and all the valuation front. So my suggestion is that if the TCS come at a lower level, no, we can buy. Okay, now let us talk about the valuation. Now, how we going to understand how we are going to calculate the valuation of TCS from here. So how to value a company? Now for IT companies, normally we take a P ratio. Okay, so P ratio into future EPS. So let me show you how we can check it out. Okay, so for that, let me open an Excel sheet. Okay, very interesting, guys. Understand this properly. So I'll show you how to value a company. Okay, now here, let us take the yearly profitability. Okay, EPS. So here the EPS for 104.75 is the March EPS, March 2022 EPS. We will take two years forward EPS. Okay, so let us take EPS 104.75. Okay, that is March 22 EPS. Okay, now and understand, now we are going to talk about next year EPS. And if we take, if you see the growth of EPS, it is around 13 to 14%. But this year it may happen that they may grow at a lower level. Okay, so suppose if we take 8.5% growth rate for EPS, okay, 8.5%. Okay, so what will the growth? Growth will be 8.9, correct? So if you take this one and if you add, so total EPS at the end of the year will be around, that is March 23 will be around 13.65. Okay, and again if we take a growth, okay, growth of almost, for the next year we take almost, let's say, as it is average growing by 15%, we take 15%. Okay, for the 24. Now, guys, this is an assumption, and this is not a precise what you say formula for calculating valuation, but this will give a good idea. Okay, so by 24th, as economy grow, and if we take a 15% CAGR, which they normally do, then 13.65 into 15% will be 17.25, 17.05. Okay, so if you add these two plus this, so 130.7 will be March 22 EPS, 24 EPS. Okay, this is the EPS for the March 24. Okay, now what is the P ratio? As I told you, P ratio for industry, if we take industry, now currently it is 29.1, correct? P ratio. Now understand, if we take 24.29, or let us take 3% less, so 26%. So if I take 26% P ratio also, P 26 times P, not percent, sorry, P. Okay, price to equity. Then it will come to almost 3,400 rupees. Okay, now that is what. If you take an average estimate of what is going on, so this is a new price we are talking about, around 3,400 rupees will be the price target for the within this year I am talking about. Okay, and this is how you can calculate a value, calculate the valuation of a company. Now what are the assumption we have kept here? The assumption, two assumption what we have kept here is this one. Just a minute. Okay, one assumption is that next year EPS Okay, these are the two assumptions. For the next financial 23 growth rate, we have taken 8.5%, and for the financial 24, we have taken 15%. Based on that, we came up to 130.7 EPS and multiplied by 26 P ratio. This is how we got a 3400 almost price. So our price target, this is what my estimate is, the price target for the TCS for the next one is 3400 rupees. Now, currently the price going on is around 3085. So at least around 10% you can say the growth is there from here also. Now, earlier the price target was more than 4,000, but because of the margin contraction and everything, the price target is on the lower side. So this is how you can actually understand and create an Excel sheet and basically understand how to know the valuation of company. And if you, and this is my past target that for TCS is for the next year is, as I told you in the Excel sheet, will be around 3,400 rupees. Okay. So guys, hope you like this video. Okay, and this is how you can do it for yourself, how to evaluate a company, how to understand against its competitors, how to compare each and every IT companies with each other. And if you want to understand more, and then I have created a complete framework, that is thoughtful investor framework, which you can go through, and it's a course, and I am going to conduct a webinar tomorrow also. Mostly I'm conducting a webinar on Wednesday and Sunday. You can join it, it's free of charge, where you will understand how to value a company, how to pick up a multi-bagger stock, and what type of global and domestic indicators you have to consider while valuing a company. So hope you like this video. Do like this video and do subscribe to my channel. I'll see you in next time with analysis of another company, another sector. So remain in touch. Thank you. Thank you very much.